Hello everyone, hope you all are doing well and welcome back to the Baking Analyst channel. On this channel, we cover everything from cryptocurrencies to personal finance to economics with a focus on yield farming and DeFi as a wealth generation tool. So if that sounds like something that's interesting to you, do consider leaving a like or subscribing to the channel. If you're completely new to DeFi and you're wondering how on earth these people are making passive income staking their cryptocurrencies on decentralized protocols, we actually have a free online course down below. Link is in the description below, and you can get it with a free trial of Skillshare. Cancel it at any time, and it'll come at no cost to you whatsoever. We've also just soft launched our Discord community, which you can join at the link down below as well. Our Discord channel is a growing community of sophisticated yield farmers who do their own research. Definitely check it out if you haven't already. There's some pretty good investment thesis in here, as well as some news and some resources. I'll also be releasing premium exclusive features within the Discord channel itself, including short form project reviews that I might not have time to cover at length in my YouTube channel, as well as advanced DeFi strategies if there's the interest for that. Do check it out. Link is down below. In this video, we'll be talking about the monthly portfolio update and how we've been doing since the previous video where I said I was making $250 a day with my yield farms. Now, to give a backdrop to this video, I just wanted to compare yield farming to the results from pure hodling. Now, if we look at this Yahoo Finance page, which is, well, I mean, it's pretty accurate. If you go to Binance or whatever, you'll probably find a similar picture. If we go back to February the 12th, when the last video was made and released, you can see that Bitcoin was trading at the 42.6k level, and the rest of the crypto market kind of follows that. So right now Bitcoin is only at 39,000, and the rest of the crypto market is also drawn down from the levels that we've seen on February 12th by and large. So with that backdrop, let's see how we've been doing this month. So looking at the portfolio, we have two main sources of income as mentioned earlier. I've removed the categorization of defensive and offensive farms, and I will talk about that in more detail a bit later. For now, the token unlocks due to the prolonged bear market situation has become a very insignificant portion of the income, whereas the farms have become a more significant part of the income. So get this out of the way. Altogether, we're making about $300 a day from both farms, and token unlock heavily biased in favor of farm. Now, there have been some changes of strategy, which I'll be going through in this video. So let's jump into the farms aspect of our portfolio, since that is the main juice of it. So the first aspect of my portfolio is the DarkCrypto pool, and I've upped that to 15k, which is half the portfolio at this point. And that is in the Dark CRO pool, earning about 349% APR, with a daily rate of about $140. Now, to prove that I'm not just making this up, we can go over to DarkCrypto over here, and we see that, yep, it's gone down a bit to 14.93. However, we do have about $100 worth to harvest just overnight. If we look at my balance, we see that our yield on a daily basis is about $142.98. So if I go over to my PowerPoint slide over here, we see that, $140 a day is a pretty reasonable estimate of what I'm getting from this pool. Now, the reasoning why I have put more of the portfolio into DarkCrypto is this. First of all, Dark is meant to be pegged to CRO, and I do intend on accumulating more CRO, possibly to upgrade to an IC card in the future, as well as to continue yield farming it. I also see that Crypto.com as a company itself is something with a very bright future, looking at how they're going so international and also going for the mass adoption by beginners in crypto, providing an off-ramp into actual day-to-day spending. This is something that we are not seeing elsewhere, and is something that they do have a defensive product position in. So as we know, DarkCrypto is a algorithmic stablecoin that's pegged to CRO, and we also know that these kinds of things, which are basically tomb forks, can fail if the peg fails. And so why do I think that DarkCrypto is less likely to fail than the hundreds of other tomb forks that have lost peg and gone to zero? Well, looking at it, it's been basically a month now, and we are still pegged at above 1 CRO, so that's very good. I released a video some time ago about earning 400+% on CRO or something like that, and that video covered exactly how I'm looking to exit this dark position in case it drops below peg. Long story short, I'm looking at it using statistical data and exiting dark when it falls 2 standard deviations below its mean. If you're interested in checking out that video, do check out my channel. I'll also link to it in the card above. Now, another thing that I really like about DarkCrypto, or what they're doing with the whole Darkverse thing, is how they're making use cases for Dark, and that could be through GameFi, as we covered in the previous video, as well as their newest project, which is the Dark Dollar. And this Dark Dollar is a fractional reserve stablecoin, just like Frax on Ethereum, where it is partially backed by actual USDC, DAI, and USDT, and also partially backed by other collateral. And in this case, that is Dark. And that creates a use case for Dark for people who want to mint Dark Dollar and use that to yield farm. And now, of course, there will be new yield farming opportunities that are coming out in dark dollar that are coming really soon. I believe the release date is tomorrow, and we'll definitely be looking into that if the yields look enticing. All in all, we see that Dark as a peg token does have some interesting use cases that could keep buying pressure up, as well as the fact that APRs while holding Dark and CRO in a liquidity pair are still pretty high and with almost minimal impermanent loss. The next portion of my portfolio comes from the Meerkat Optimizer, or MMO, and that is another half of the portfolio that has just been left there. As per the previous video, nothing has changed. I've been harvesting the MMF and MMO and putting it back into the Dark CRO pool simply because I want to accumulate more CRO. It is also important to note that Dark CRO has no withdrawal fees, whereas MMO does if you withdraw after a deposit within 72 hours. So liquidity is another reason why I'm keeping it there instead, even though MMF USDT might pay a higher rate. MMF, or Meerkat Finance, definitely does look to be a growing ecosystem on the Cronos chain as well. They have just developed NFTs, MMF, and Optimizer, and now they're also coming out with the METF, which is some sort of decentralized exchange traded fund token that is meant to represent the value of underlying tokens within the Meerkat Finance ecosystem. So currently they're paying about 360 to 365% APR, and I'll round it up to about 1% daily, which is about $150 a day. And as we can see, it is about 362% right now, pretty close. And we see that we have 14.8k down here, as well as maybe about $200-300 here, which can be recompounded back into the pool. So the fact that this is slightly under 15k is a moot point because I can just compound it in, right? So we see that we have $150 per day from Meerkat Optimizer, just the same as before. In terms of the token unlocks, this has not been doing well. As I mentioned earlier, we are having a prolonged bear trend over this month, obviously due to what's going on in Ukraine, but also because of inflation numbers that have been coming out over this week, causing some uncertainty. So what has been happening is Magic has dumped all the way to around 30 to 40 cents as per the time of this video, down from around $1.20 when we recorded the previous video. And that represents a drawdown of around 60 to 70%. And for Viper, the same is true as well. Viper is now trading for less than one Harmony 1 token, which means that it is around 6 cents. In the previous video, it was closer to 40 cents, and that would be a decline of over 80%. Token unlocks definitely not something to be dependent on in the long term. I'm just dollar cost averaging out of these positions just so as to lock in those prices in case they go down even further. Now, that brings about a cautionary tale regarding locked tokens or risk of farming things like Jewel or Defira, where a considerable portion of it is still locked up. Viper, well, that's out of the question. It still remains just a DEX and a usual farm token. By design, that kind of token is likely to go to zero. However, Magic, on the other hand, is a token that's for use in a game, just like Jewel, just like Defira. However, it has also experienced high volatility. And, the same can be said about Jewel. Jewel used to be over $20, but now it's trading at around $4, and that marks a dump of about 80%. Can we see another dump of a similar size? Absolutely. And that is something that we should not ignore, even though we think that, Jewel is a good project. I think it's a good project. Defira is a good project as well. All these GameFi apps, definitely something that people will be aping into in future, especially given the hype around metaverses, play to earn, value accrual to the player or the gamer. So all in all, we see our daily harvest is making $150 and $140 a day, which gives us $290 a day. And with the extra $10 or so a day from token unlocks, that takes the gap up to $300 a day. And one of the questions I might get while making this video is, why have I removed the lower risk CRO-USDC pool? And in this case, I want to compare two particular strategies. The first is putting half of the portfolio into completely unstable coins such as Dark CRO and 50% into low yielding USDC USDT pools that are paying about 20% APR. For example, if I were to stake it on Anchor or just find some stablecoin pool in Cronos. So in order to compare these strategies, we can move over to CRO-Blanc. We see that CRO-USDC is paying about 71% per annum, even if we assume we are getting 90 to 100% APR as we were a month ago on CRO-USDC. We see that if we had 50% in a 300% APR pool and 50% in a 20% APR pool, we simply take 300 plus 20 and divide it by 2, we get a weighted average APR of 160%. This is higher than the total APR of putting all of the coins into the CRO-USDC pool with an APR of 90 to 100%. Now, this calculation may of course differ for different people and across different DeFi protocols. However, we see that even while we're earning this higher 160% APR, for example, in this case, we're also eliminating the risk of impermanent loss. So if your unstable pools drop 50%, you only lose literally 25% of the portfolio. Whereas in the CRO-USDC case, if CRO loses 50% of its value, your portfolio actually goes down slightly more than 25% because some of that USDC is used to catch the falling knife, so to speak, meaning that as CRO goes down, USDC is used to buy up CRO, which goes down further, causing losses to be amplified. And given that the market has been down for a while amidst peak uncertainty, I do want to position a larger amount to buy the dip. And in this case, that would mean putting more into the dark CRO pool. So I hope this video has been informative and useful. If you like this video, do consider leaving a like and subscribing to this channel. Once again, I would like to invite you to join our Discord server, which is a growing community of yield farmers where everyone is sharing their alpha. They're a very open community. Link will be in the description down below. With that being said, thanks for watching and I'll see you in the next one.